Welcome back to the deep dive. This week, we're pulling apart a big one, Tesla.
Yep, TSLA.
If you've been watching the stock, you know it's been quite the ride, especially that week from July 18th to the 26th, 2025.
A really pivotal week.
Exactly. It's a great example of how fast things change and what really moves a stock,
Yep.
especially if you're newer to investing.
Right. And our goal today is to just cut through all that noise from that week. We've looked at the announcements, the earnings, analyst takes. We want to give you the essential insights, basically. Show you why that week mattered so much for Tesla.
Okay, let's unpack it. The headlines felt pretty negative, didn't they? A lot of, well, sobering news.
It did.
But with Tesla, analysts often look way beyond today. So what are they seeing as, potential positives, any signs of future growth?
That's the key question. It's fascinating because despite the current financial picture, the focus is really on the long game. Robotaxis and their whole AI push, they're actually piloting robotaxis in Austin now. And there's serious talk about San Francisco soon. It's not just talk, it's central to their autonomy strategy.
So less about car sales right now, more about that autonomous future becoming real.
Precisely. Analysts keep saying for Tesla's next big growth phase, they need to show robotaxis will move the dial. It means proving this tech can be a real profitable business. That's what justifies, the huge valuation. It's valued more like a tech or AI company, not just cars.
Right. The valuation is based on that future potential.
Exactly. But it really hinges on seeing actual results, measurable progress soon. The market wants proof.
Okay, that makes sense. Future hopes versus current reality. So let's talk about that current reality. The Q2 numbers weren't great, were they?
No, definitely not. We saw Tesla report its worst quarterly sales drop in, over a decade. Revenue was down about 12% year over year, $22.4 billion. That missed expectations, signaled a tightening market. Maybe the price cuts didn't fully work as hoped.
And earnings per share? Any better there?
Unfortunately, no. Adjusted EPS also missed, came in at 40 cents versus the $1.42 expected. And then CEO Elon Musk himself warned investors, basically said, expect a few rough quarters ahead. It's pretty direct.
Wow. Why the caution?
Well, things like EV tax credits expiring, plus, way more competition from legacy automakers and Chinese EV makers. The stock reacted badly, dropped about 8%, closed near $305. One of its worst days in 2025, really.
Okay, so a stark contrast there. Future promise, current pain. How are analysts valuing the stock now? Are they still bullish or getting cautious?
They're really divided. It perfectly mirrors the situation. You've got bears like UBS calling it fundamentally overvalued with, I think, $215 target. JP Morgan's even lower, $115.
That's significant downside.
Yeah, they're looking at current fundamentals, production, margins.
But there are bulls, too.
Oh, yeah. On the other side, you have Wedbush with a $500 target. They're betting big on the robotaxi, AI, the whole tech transformation story. When you average it all out, the consensus target is around $300, which interestingly implies maybe 8% downside from where it was trading. So the average view is kind of neutral to slightly cautious.
That's a huge range. Are there other risks playing into this beyond just the numbers, things may be harder to quantify?
Absolutely. Brand risk is a big one now. Investor sentiment, too. You had Ross Gerber, a longtime Tesla bull, call the earnings sad and depressing. He pointed to concerns over Musk's political comments and actions potentially hurting the brand.
Right, the idea that the CEO's actions could actually impact sales.
Exactly. If people choose not to buy because of the CEO, that's real lost revenue. Plus, you have other worries like tariffs, general distractions. It all weighs on confidence and demand.
So summing this all up, the promises, the bad numbers, the divided analysts, the brand risks, what's the bottom line for someone trying to make sense of this for investing?
Well, the key takeaway is this duality. Tesla just posted its worst sales drop in ages with a cautious outlook from the top. That's serious. But analysts are split. Some see major risk based on today's reality. Others see huge potential if the future tech like robotaxis and AI pans out.
And this is where it gets really interesting for you, the listener.
Yeah, this whole situation really highlights how volatile individual stocks can be, especially high-growth tech names. Tesla could be huge, but the path is clearly rocky. So the question for you is, are you comfortable with these big swings, holding through rough patches? Or maybe diversifying, spreading your risk across other tech stocks or even index funds makes more sense while Tesla works through these challenges.
It really makes you think about that balance between present performance and future bets, something to keep considering. Until next time, keep digging.